All right, what's up, YouTube? I know it's Friday, and I hope that you guys are catching pips this whole week. Profits, positive vibes for you guys. Anyways, this topic of my video is going to be on naked forex, scalping on the 15-minute chart, and then I'm going to hop down to the 5-minute and to the 1-minute and explain a little bit more in details on scalping. I know a lot of you guys are probably asking, is it possible to scalp with naked forex? Yes. Is it possible to scalp just price action? Yes. You can scalp with just one indicator if you wanted to, or you can just scalp with just strictly just looking at the main screen. The main screen is very important. I talk about this because, oh crap, I got my microphone. So I've got to. Oh my gosh, I got my microphone right here. Oh crap, I totally forgot. Oh, it's all right. Never mind. I know you guys are asking about audio, so I know I've been trying to get all things situated, but anyways, the microphone's gonna be out on this one. So with what I'm trying to say is that let's just hop into the 15-minute chart. So with the 15-minute chart, this is USD JPY on the 15-minute chart, dollar to the yen, and I'm going to highlight some very important rejections, price rejection here and here at 108.850. Pretty strong resistance here on the 15-minute. You can clearly see that this sent it right back down. And I wouldn't be surprised that it be coming back down to retest the lowest price of 108.25. So we have a 60 pip retracement here from 108.25 all the way up to 108.85. So very important to pay attention to, especially on the 15-minute chart, 60 pip range from the lowest price setting all the way up to where resistance is being hit. So that's why I like using the 15-minute chart. Those that want to scalp, you capture more than 10 pips. So those are trying to target more than 10 pips a day or 10 pips an hour. There you go. You can look at this setup here. Now, what is the next step when Sunday comes, all right? So I'm going to talk about a little bit on Sunday before I hop down to the 5-minute chart. When Sunday comes in, it opens up on UJ. I just call this UJ, easy as a nickname, U and J. So this is very important because when UJ opens on Sunday, you want to look at the opening gap, right? So wherever the opening gap is, I wouldn't be surprised if it gaps down and then retraces back to the 108.85 area, right? So what I'm looking at is, oh, someone's trying to hang out, I guess. So anyways, let me put this on. I hope you guys can hear me clearly. I mean, I know some people were saying they were having a hard time. That's why I'm up. I got my audio here, but I just didn't hook it up. So I totally forgot about that. I just got too excited about making a video for you guys. So, look, is for the open gap on Sunday. So I probably wouldn't be surprised if it opens down like around here, like 108.65 or 108.6, like a 20 pip gap or maybe a 30 pip gap, and then bounce right back up and to retest the resistance price at 108.85. And then from there, to me, from that gap on Sunday, then I would go back and do a sell position as a test mode. So those that don't understand what testing positions is, I do it all the time. Reason being is because there are times that, especially on Sundays and Mondays, you don't really get to see a good trend structure, or you don't get to see where the new direction of the week is going to go. And so you got to be more prepared on those on the opening day and the second day. So that's why Sunday, Mondays are crucial if you're going to set it up properly and hold it out for the whole week, or you're going to hold it out for the next 2-3 days, or you're going to hold it out till Wednesday, because Wednesday is the middle day of the week, midday of the week. So Wednesdays are very crucial if you're hopping in on reversals or pivot points of the week, where things end up reversing because of high impact news. If you look at Wednesday as like a pivot change or a reversal point, because Wednesdays have a lot of high impact news, if not Thursday does. I'm gonna hop back down into the 5-minute chart and go back into here. And you can clearly see that the 5-minute and the 15-minute outlines very easily on resistance, right? If your first line of resistance came down, build support, came back, did not break the new high, right? Went back down, came back to retest the third time. When you're on a shorter time frame, when you're on a really short time frame, like the 15-minute, 5-minute, the 1 minute, I don't like looking at the 1 minute anymore, because the 1 minute is just too much ups and downs, and you need like, I don't know, you need like 6 to 8 resistance lines, and I'll explain that later. But with the 5-minute and 15-minute, usually after the third or the fourth time, it creates resistance or support. Resistance or support, then I'm looking for a major downfall on a resistance, like what it's doing here, right here, or looking or support, right? Or support where even when it has like a massive fall and then comes back. So when there is a lot of support or a lot of resistance, then you have to be prepared for a major breakthrough. And that's the dynamics of looking at support and resistance. And so don't get too caught up on trying to pinpoint, on support and resistance, but you want to pinpoint where price is being rejected so much that you have to be prepared that they're going to send it back down pretty hard. Same thing when it gets rejected or bouncing back up, and then it keeps pushing back up higher and higher and higher. And then you got to look at, okay, what's the new level of resistance that's going to go if it's going to keep pushing back up? If it breaks through that, then then you're looking for a new high, a new price to continue at a higher price. So I know I'm talking a lot about resistance, but resistance is easier to work with than support. Number one reason why resistance is easier to work with than support is because you can see a lot of rejections at resistance versus support, because at support levels, it gets kind of tricky. Like here and here, based on 5 minutes, you just keep selling it. But when it's bouncing back up, then you got to be prepared to buy it, and then look to see if this setup is going to break the resistance path. But it didn't come up to break it until you're talking about almost a full day. And it's on the 5-minute chart. So obviously I wouldn't be looking at this on the 5-minute chart to look at a full day turnaround. So if you know it's going to take that, if you know it's going to take 12, 16, 18, or even 24 hours for a big change, then there's no point. And so I'm going to hop into the 1-minute chart and explain why I don't like using the 1-minute chart anymore. And I'll explain right now. Number one reason why I don't like using the 1-minute chart is because it is so volatile and it's so unexpected. And people are talking about capturing. I even listened to some people too back then when I first started trading. I was talking about this 1-minute scalping strategy, right? I'm not trying to make fun of this 1-minute scalping strategy. I'm not trying to downgrade the person that talked about this. But all I'm saying is that is that you can't catch 100, 200, or 1,000 pips off the 1 minute chart. I don't know how people can make this stuff up, and people are just making this stuff up, which I don't believe that there's no way 100 pips on the 1 minute chart. The only way you're going to do that is if you're constantly scalping in and out, in and out, in and out, in and out for 2-3 hours straight to get up there. And let's look at this. Let's look at the price, right? Resistance 108.85, and then down to what, 108.74. But let's just round it off to 108.75. You're talking about 10 pip range right now off the 1 minute, and that's pretty solid on the 1 minute chart, bouncing up and down within the 10 pip range with USD JPY. The second thing why I talk about USD JPY, because this is by far the best pair to scalp. In my honest opinion, I would rather scalp UJ than euro to the dollar. Euro to the dollar is not a universal base pair, and when Tokyo sessions hit, it does not involve euro, but it involves USD JPY. That involves the dollar to the yen, because you have the US dollar and you got the Japanese yen. Asian sessions tied with New York sessions, you can't beat that, best of both worlds. And then the yen pairs move a lot during London sessions too. So you get that's why I like scalping this pair, because this pair moves so much faster, and it's so much more easier to work with, and it's much more easier to count on pips, because it's a 3-digit. It's 3 digits in the front and 3 digits in the back. And so easy to work with price, easy to work with numbers and counting, and just looking at where setup is going to be, especially in the shorter time frame. Now in the longer time frame, UJ and the yen pairs have not tested the highest price since 2015 or 2016, and they've been on the downtrend ever since. So look at that in the monthly chart. I'm not going to explain that. I'll explain that on another episode. So this is very crucial, because when you want to get in on the 1 minute chart, and this has nothing to do with looking at RSI, stochastic, or MACD. And this is going to be a long video, because I want you guys to understand my concept and how I look at the Forex markets, and how I scalp and how I swing, how I do intradays, and how I analyze it myself, to where you can pick and choose and pinpoint what structures you like to use from my videos, and what you don't like, and then what is going to be your strengths, and your money maker and strategies. And so just because I make my own strategy doesn't mean you're going to make this. Yeah, doesn't mean you're going to have the same outcome of my thing, of what my setups are. So you have to practice and understand that, when you find something that works for you, that's it, and you just keep to it. So back to the 1 minute chart here. I know there's a lot of nonsense, but back to the 1 minute chart. Obviously, a lot of resistance was being a lot of resistance at 108.85. All right, coming back down, right, and you can see that this really strong bearish candle breaking through the support price here at the 7.6, right, the 108.76, breaking down to 108.74 at closing. And like I said, I'm looking for a opening gap on Sunday, right around under the 108.7 area, right around here, and right around here at 108.6463. So what I'm looking at is a 10-20 pip price gap on the opening gap on Sunday. I don't do this anymore. I don't count Sunday. I don't look at Sunday gaps, and I don't really try and pinpoint what I want to do when the markets are opening, because they're just trying to feel it out. Markets are trying to feel it out at that time anyway. So Sunday is not the best time to try to hop all in and go all in and try to start stacking on the whole thing for the whole week. Not a good idea. I learned my lesson. and do not stack a bunch of trades on Sunday. Let it play it out until New York opens on Monday, because then when New York opens, you get a chance to see what Wall Street's trying to be doing. Then you have the overlap, right? Because London overlaps with New York sessions within the first 3 hours of New York. So it's so volatile. You get to see a lot of breakouts, a lot of structure being, a lot of structure movement that's going to break into a new trend, leg down, leg up. So that's very important. Now, if you plan on scalping throughout on Sunday, I don't recommend that unless it's London sessions or at the end of Tokyo sessions. Then yeah, I could see that. But at the beginning of Tokyo, it's not the best, and so you understand that Tokyo is not the most fast-paced session. So, but based on the 1 minute. I don't really want to talk too much because I haven't talked too much with the 1 minute, because the 1 minute chart is not the ideal to like try and go for a max amount of pips. A lot of people try to shoot for 50 to 60 or 100 to 200 pips, and they look at the 1 minute chart. It makes no sense whatsoever unless you are planning on focusing here for 2-3 hours max, and you could catch those amount of pips if that's what you want to do. But you're constantly focusing here on the screen. And that's what I did. Not on my phone. I wouldn't be doing it on my phone, I'd be doing it on the screen. It's easier to pinpoint your analysis on the computer, right? Because the screen is bigger. On the phone, you really have to dive down. And I'll explain a little bit more on the phone on my next video, is that if you plan just to scalp on your phone, you seriously have to know that you're looking at a smaller screen, and you really have to dive down and pinpoint, what prices you plan on buying and selling. And when I'm talking about price, it's back to price action. It has nothing to do with, like I said, it has nothing to do with looking at indicators. And so that's why I talk about price action. I'll get a little bit more in detail on price action next year. I don't plan, like I said, I was never planning on doing any courses for anybody. I don't plan on selling any courses at the moment. I probably don't plan on selling any courses. I just want to sell my book. I plan on revamping my book into naked Forex price action and candlesticks, and leaving all the indicator chapters out of the way. And so that would be a new step into my third revision into my book here for next year. And yeah, that's it. I know this is a long video, but like I said, if you like to use the 1 minute chart, by all means, you should probably, like I said, the most ideal amount of pips, especially on a 1 minute chart, 3 to 5 pips, maybe 6 pips. On the 5 minute chart, it's a little bit more easier to work your way towards 10 to 15 pips. And then on the 15-minute chart, what I just showed you from this low price here, what is it? 125, and then the 185, that's a 60 pip range. And so if you want to scalp, look at the 15-minute chart. You can't go wrong with the 15-minute chart. It's easy to work with. You get a new 15-minute candle every 15 minutes. So that's 4 15-minute candles in 1 hour. And when the fourth 15-minute comes out, take a look at the 1 hour, right? So take a look at the 1 hour. So let me go here. And why the 1 hour is so crucial to pay attention to is so that you can look at where the overall structure is going, right? So UJ had a massive retracement, right? From here all the way back up here, but we know there was a lot of resistance here that sent it back down. And that's what I'm looking at again. To retest 108.2, to break 108.2, if it's not gonna break it, then we look at it as a double bottom in the 1 hour or the 4 hour. Notice that I'm talking about a higher time frame than a lower time frame. Those that are just sticking to shorter time frames, it's hard to pinpoint double bottoms and double bottoms and double tops. I don't know why because you're not looking at the highest price of being the highest price of rejection and the lowest price of rejection. It is very important to look into the 4-hour, daily, even the daily chart to pinpoint where prices are being, bounce, where prices are bouncing off of. So you have an overall structure to look at. Without looking at the overall structure, and all you're doing is constantly scalping, then there's no point you try and get in and hold a position for the trend, because all you're doing is focusing on scalping. You gotta know when to be a swinger, a scalper, or you know what? No, you gotta know how to be in between in the forex markets. Adaptability in scalping and swinging at both times, if there is, which most cases there is. When it's consolidating, you know you can't swing. So that's the most easiest way I can say it. So consolidation, you're stuck. And scalping on consolidation, I'll talk a little bit more about that in another video. More videos to come. And I know this is a long video, but I hope what I say makes sense and that you guys take the time to watch this thoroughly for yourself, to understand it for yourself, and pinpoint what you like and what you don't like, and use what you think is best for you. And so, like I said, this is all on me, my opinion, what I look at, how I analyze it, and how I view the forex markets for myself. So other than that, I hope you guys have a great Friday, a great weekend, successful trading for next week, and for the end of the year, right? The end of 2019 is ending. So make this end of the year count, and then make 2020 even better so you can be more successful for yourself. You feed for yourself, you make your own money, you don't have to rely on anybody else. And I want to hear your success story. I definitely want to hear your success story. I definitely want to hear all you guys' success stories. And so that's why I want to see all your guys' YouTube channels too. So peace.